Well, welcome back. Now, in this episode, I'm going to answer your question, how much do tax lien certificates cost? Now, my name is Ted Thomas. I've been doing this for about 30 years, and the last 25, I've been teaching other people how to do it. It's a very interesting business. If you stay with it, you'll learn how to make some really big money. If you haven't been involved in tax lien certificates and don't know anything about it, I'll go through that. But this is a big money business if you want to make it that way. Now, I got in the business because I found out it was little known, but it's really highly lucrative. So follow along with me and you'll get quite an education over the next few minutes. I'm going to share a lot of details with you. Okay, so as I say, it's a lucrative business, but very few people know about it. So I'll give you a little background as we go along. Now, you want to learn how to make money with small investments and grow them to kind of retirement income. You can certainly do that with tax lien certificates. Now, before I finish this video, I want you to know at the end of the video, I have a free gift. I said it's a free gift and it's valuable. It'll teach you how to make profits with tax lien certificates, and it'll teach you how to make big money with tax deeds. It's going to be my gift to you, and it'll be at the end of this video. I'll also tell you about two big mistakes that investors make that you want to make sure that you avoid. Okay, so stay tuned. I'll come right back. Okay, how much do tax lien certificates cost? Well, folks, you can buy them for pennies and you can grow them into some pretty big money. Okay, now most people don't want to buy the ones for pennies simply because if you invest pennies, you're going to come out with pennies on the other side. So they want to get properties and get tax lien certificates that have value and they can really make some money. So I'm answering your question, how much do tax lien certificates cost? But first, I better give you a little foundational material so that you'll know what you're buying when you buy a tax lien certificate. So the process works all across the United States. And basically, it's this. All properties have tax. All right, now about half of the states will sell tax lien certificates when the property owner does not pay the tax. So I'm just going to tell you, all property in the United States is taxed. If the people don't pay the tax, half of the states will send out a tax lien certificate so someone else can pay the tax. Now, they let the owner stay in the property. They can stay on the property while they're doing that. Now, the other half of the states, they're not quite so benevolent. They will also send out a notice that the property's in default, except they ultimately will not send a certificate out. They ultimately, after they've levied the tax, tried to collect the tax, they will confiscate the property and resell it. So there's two different systems that are in place. One is for tax liens and the other is for tax deeds. But what we're doing now is we're talking about how much the tax lien certificates cost. Believe me, you can buy them for pennies and you can grow them into dollars. Or you can buy them for a few $1,000s and grow them into retirement income. So I'm going to give you that kind of the inside scoop and all that. All right, now let's face it. Nobody likes to pay taxes. So people say, how do they have tax liens to do it? Well, I'm going to tell you, everybody doesn't pay. Millions of people don't pay their property tax on time. I said millions do not pay on time. So the local government has to do something. So in the tax lien states, they issue a certificate on that property, and anybody can buy that certificate. So the certificate simply says, this is a tax that someone didn't pay, and if you'll pay it, we'll give you a generous reward. And that means the county will give you a generous reward. And that reward could be a high interest rate. As a matter of fact, it's not high, it's outrageous. It could be 16%, 18%, 24%. I've seen all the way up to 36% interest on a tax lien certificate. Now, in some instances, the homeowners have just forgot to pay the tax. Nobody likes to pay tax, so some people just always pay it late. Okay, now if someone passes away, no one's paying the taxes. So that means they're going to be issuing a certificate there. So there's literally dozens of reasons people don't pay the tax. But what you care about is they didn't pay the tax, you can pay it, and you can make that outrageous interest rate. Anybody can buy them. Now, how would you know where to buy them? Well, they're going to be announced in the newspaper, and they'll also be on the county website. So you're kind of getting the idea. Now, half of the states sell tax lien certificates. The other half of the states sell tax defaulted property. All right. Now, if the purchaser of the certificate, buys the certificate. They don't have to do anything. It's a passive investment. So all you do is buy the certificate, take it home, put it on your desk, or many people never leave home. They just buy them online. So the treasurer now controls the money. So when you buy a tax certificate, you invest with the government, you get a check back from the government. But you're worried about how much money these certificates are going to be. So give me a couple of seconds to give you this foundational information, and then you'll know. Just know the certificates pay outrageous interest rates. All right, so to follow me along, and we're going to tell you about the certificates and how much they pay and how much they cost. So let's just start out with a tax of $2,000, okay? If the maximum rate in that county is 18%, then you can earn up to 18% on that $2,000 certificate. But every property isn't worth $2,000. So if the property was worth, say, $100,000, I can tell you the tax is going to be between 1 and 2%. So most property tax is between 1 and 2. So on a $100,000 property, the tax could be somewhere between $1,000 and $2,000. So you're getting the idea. All right, so the highest it's going to be is that $2,000. All right, so let's use that as our example, all right? So on a $2,000 tax certificate, if you bought one, well, then you could earn all the way up to 18%. So that means you can earn $360. Now, $360 doesn't sound like a lot of money, but what if you bought numerous certificates? Or what if you put the money in the bank? In the money in the bank, you would have earned 1%, but on the tax lien certificate, you earn 18%. So taxes are 1 to 2% of the property value, and now whatever the property value is, you can pretty much figure it out, 1 or 2%. So a $500,000 property, the tax is going to be between 1 and 2%. So the lowest it's going to be is $5,000, and the highest is $10,000. So you're kind of getting the idea. Now, are the rates exact as I'm saying? No, I'm giving you approximates to work with. All right, so how much do they cost? It's going to be up to you. You want to buy tax lien certificates in the country club? Then you'll spend a little bit of money. If you want to buy them in the average neighborhoods, you're probably going to spend between $1,000 and $2,000. $1,000 and $2,000 for a tax certificate. However, the generous rate of return could be sky high. I mentioned Florida at 18%, but over in Arizona they pay 16%. Illinois pays 36%. You're getting the idea. Now, how do you know about these tax certificates? You're going to be able to find out online about tax certificates. Online, you can buy them there by going to the county website. If you want to check the newspaper, you're going to be able to do the same thing there. You're going to learn about the tax certificate. All right, anybody can buy. Now, when you buy, they're going to have rules. They're going to say you have to pay cash, or you have to pay it with a bank draft or with a check. They'll tell you exactly how they want to do business. If you go there and say, "Oh, I want to send you a check next week," they're just going to resell the certificate. They're not going to wait for you. At the auction, they do the business and they get it finished up. All right, so let's do a couple of comparisons here so to make sure that we've explained it correctly. If you are buying a rural acre, and the rural acre was a piece of land worth $3,000, all right, the tax is between 1 and 2%. All right, so now how much money would you need to buy? Well, you wouldn't need very much money to buy that certificate because the tax is between 1 and 2%. So maybe $100, maybe even less. All right, so you're getting the idea. So not a big investment if you buy that. Now, what if you bought a property that, say, had a $200,000 value? Well, now you're going to have to spend between 1 and 2%. So the low of being 1% would be a couple of $1,000s. And if it was 2%, it would be about $4,000. So you're getting the idea. So it's not difficult to figure out how much money you would need to do a tax certificate. All right, now what most people want is they want to make money. Well, that's exactly what situation the county is in. So the county wants to make money, and they want to make their money from revenue of taxes. They want the revenue. So if you bought a tax certificate and the people didn't pay you, I can tell you right now, you're going to get that property because the county is going to wipe out the mortgage, and then they're going to award the property to you. So there are people that go and buy tax certificates in the hopes of getting the property. Now, I would say close to 95 and 97% of these certificates are going to pay you back. At least that's what the county governments tell us. 95 to 97% get your money back. But if you didn't get paid on a tax certificate, well, now what are you going to get? You're going to get the property. So if you spent $1,000 or $2,000 on the property taxes and you don't get paid, now you're going to get the property for what you spent, because the local government doesn't want the property either. So they're going to award the property to you, and then you'll start paying taxes on it because you'll own it. But now you own a property without a mortgage, because the tax collector wipes out the mortgage. They just exit out. They just take it right off the county records. So if you bought a property for 1 or 2%, you just made the deal of a lifetime. All right, so tax lien certificates, they don't cost much, and actually tax defaulted properties don't cost much. What does the county want? They want the revenue from the tax money. They don't want any more property, so they want revenue. So the county runs on revenue. That's how they pay the police department. That's how they pay the fire department. In other words, the county is going to pay all their bills, and they try to do that as much as possible from the revenue of those property taxes. So they don't want the property. You could end up with a property. Now, how does that happen? Well, it happens because the state legislature gave the authority to the treasurer to not only levy taxes and collect them, but if they can't collect the taxes, they can confiscate the property. When they do that, if you had a tax lien certificate, they're just going to award the property to you because they don't want the property. They want the revenue. All right. So I know on the surface this appears to be amazing. This has been going on for decades. So let me give you an example, the perfect example that you'd like to live. The perfect example is I have clients in Phoenix, Arizona. They bought a tax lien certificate for $11,000. $11,000. Before they purchased it, they did what I told them to do, go check and see what it is. Turns out it was a nice condominium that was built in an area where they had fountains of water and they had beautiful green grass. So it was in a nice neighborhood. They paid $11,000. The property owner never redeemed. In other words, property owner never paid the taxes. So the local government awarded them the property with no mortgage. So they got a property valued at $180,000 and they spent $11,000. All the profit was theirs when they sold it a short time later. So let me review that. They invested $11,000. They waited for the property owner to pay. The property owner did not pay. When the property owner doesn't pay, you're going to get the property without a mortgage, which they did, and it was a $180,000 property. They ended up with $169,000 after they paid off all the brokers. You can do the same thing. So you can buy tax lien certificates for pennies, or you can buy them for whatever price you want. I've seen them for $1,000 all the way up to $150,000. It's just going to depend on the value of the property and the amount of money that you want to purchase. All right, I'm going to do 2 questions before I finish up.
Ted, can someone bid for me at the auction?
The answer is yes, but I don't know all the details of that. So what you'll have to do, I've been there while people did it many times, but the point is you'll have to find out what the county rules are on that. So don't assume that you can just call up somebody and have them do that. You need to know what the rules are.
Could I buy a tax lien certificate after the auction?
Well, I always tell people this is a business of abundance, and rarely will they sell all the tax certificates or the tax deed properties. So what they do after the auction is they have another list. We call it the over-the-counter list, and yes, you can buy after the auction. Okay, time for me to button it up. And if you've already been watching for a second, just stay with me, because I do want to remind you, when I finish, there's a free gift for you. I said it's a free gift, G-I-F-T, and it's going to teach you about tax liens and tax deeds. And I'm also going to remind you again, you don't want to get involved with purchasing property unless you've had eyes and boots on the ground. Why? Because they could have a hurricane, they could have a tornado, they could have a fire, or who knows, it might be next to the railroad or a chicken farm. What are you going to do then? Oh my goodness. You won't want to own that property, so make sure that you've seen the property. The other big mistake that people make, and it doesn't matter whether you're a new investor or an old investor, what they do is they get involved in the auction and they start bidding up, 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 up. You don't want to bid on a property unless you have an exit strategy. I'm Ted Thomas. I'll see you in the next video.